U.S. stocks were mostly lower Tuesday after social media giant Snap Inc. puked in its biggest one-day drop on record, and the Nasdaq fell 2.3% to its lowest close since November of 2020 after the economic warning from Snap that sent the company's stock down 43% and sparked a broader tech sell-off. The S&P 500 also fell, placing the index back on track toward a bear market. However, the Dow Jones Industrial Average gained in the final hour of trading after reversing earlier losses. Snap's fall spilled over to Facebook, which fell 7.6%, and Google, which declined 5% to a 52-week low. I'm just wondering what will happen to Twitter after all of this. I have a sneaky feeling that Twitter is going to get spanked. We'll see. But expect more volatility as of the 460 companies in the S&P 500 that have reported earnings. 338 have cited the term supply chain during calls with investors, and as far as I can see, the supply chain ain't fixed. Now, I know you want more stock picks, but given the volatility, I got to go back to the charts. Let's just stick with the charts simply because the stock picks will be there, and I don't want you to be in a hurry. And today we're looking at the 6-month daily chart on the Fidelity Nasdaq Composite Index ETF, and the symbol is ONEQ, and this serves as a pretty good proxy for the Nasdaq. So we're looking at the Nasdaq simply because it's got hammered more than the other indices. Now we're here at this point doing a double bottom, but I don't think it really matters. We're so far down, a lot of damage has occurred, so I don't think we're going to snap back anytime soon, no pun intended. I think we're going to trundle along the bottom here for a while. So definitely you can see we're in this downtrend, and we'll draw this line here, the bottom downtrend line, and this line more or less through here. It's not a straight line, but you get the idea. We're not quite at the bottom here of the trend line. We may come down here in the next few days or so. However, it's equally possible that we could go sideways or up. Things are so volatile. But let's say what the oscillators say. Into volume, actually the volume is declining, and that's what you want to see in a downtrend. At least that's what I like. And here into the MAC, you can see that from that top there, it's been ugly on the way down. A number of attempts to break up and through. We're down here at -2 with the fast line, came on up, got reflected back, came down here. It's very close to that slow line, so I think it probably will break through, but I don't think that's going to be all that significant, because if you look back here when we broke up and through down at these levels, even though the fast line and the slow line both improved, the market itself really didn't do much. You can see that here. It broke on up, came up, but it failed halfway back up to that top channel line and broke down and hit the bottom channel line once, and it attempted to do it a second time. So again, I'm not so convinced that a move up is going to be all that meaningful here, at least in the next few days. So just continue to be patient. The histogram does show that it wants to go up as well. I think a lot of these oscillators are going to show some improvement, but again, just be patient. I'll show you why. Here, price rate of change, pretty much the same pattern there. The RSI has been going through this channel with that lower level and that upper level, just trundling along under that 50 or midline, and when that happens, the stock market continues on a downtrend. Now, if it was on the upside, well, that would be better news, but it isn't. Here into stochastics, pretty much the same thing, and then Williams. Maximum negativity all the way through here, and even though it's shown some improvement here, you don't really see it in the price chart, and that is what counts. Moving back up here to the price chart one last time. Now let's go take a look at another chart. And now we're looking at the 20-year monthly chart on the ONEQ. And here's the problem. The rollover at this point, and this index came on down, sliced through the 20 EMA, and came all the way down to the 50 EMA. And once this slice occurs through this area here, all bets are off. We talked about that, and maybe 2 or 3 of you that saw the video were prepared. Moving on down here into the volume, not going to show you anything, but here is the MAC, and that shows you the big problem. I was hoping for a reflection, at least in the S&P, a reflection that would bring us back on up, and that would bring us to a double top. I thought there was some problems with that at that time, but I also said that if the fast line did come through the slow line, then all bets were off, and it has, and it's come through with a vengeance. There is some acceleration between the fast line here, the black line, and the slow line up here. So you know what that means? That means volatility at best, sideways movement at best. Moving down here into the histogram, you can see this was a real steep drop-off. Once it went through that zero line on down, kind of a waterfall. And maybe your portfolio is feeling the effects. Same thing here with the price rate of change. Very fast downward move. Relative strength, as well as the stochastics and the Williams. All of the oscillators are showing very big drops. So back up here to the price chart. What that means is that we have some time. A lot of time is going to be needed for the market to repair. Now, while it's in the repair mode, that's when you do your homework on the stocks that you want to buy, the stocks that have good dividends, good fundamentals. And I'll definitely be coming out with more of those videos here soon enough. But for now, just practice your patience. If you have a program and you're investing at scheduled intervals, keep to the plan. And for the other investors, just hold your patience. Practice that patience. That is the key to good investing. And for today, that's ChewDog Charts. Thank you.